Welcome to the Daily Brief, where I'll go over the action in the market for Friday, March 3rd, and then we'll see how things look for Monday, March 6th. We had a pretty solid up day. In fact, this has shifted things to looking potentially more positive. What we're going to need to see now is follow-through. We're coming into a week that seasonally and historically has been rather weak. We're coming up to a report next Friday that kind of spooked the markets a month ago with the employment situation report. Is that going to happen in the upcoming week? We have Chairperson Powell testifying before the Senate and the House. The markets will be hanging on every word that is said, and that could fluctuate things quite a bit. That being said, we're still seeing a real bounce off of the 200-day simple moving average, and we were able to regain the 50-period moving average, so things are turning more positive. One thing that is also a bit of a concern is we're still below average with volume. To see a really solid update like we saw and not seeing an increase of volume is a warning sign. But we still have to follow price and what's happening. So let's go back and talk about what happened. Right at the open, we had a gap higher open. The futures were fairly positive during the night and kept that gap going so that when we opened, prices moved quickly above R1 at 4,005. As the day went on, prices moved higher up to R2 at 4,029. We finally hit resistance at the 4,050 level. If you've been watching these videos for a while, you notice that this was a support level just a few weeks ago. Now we're coming back up and it's starting to be a resistance level, and we ended up closing near the high. We were up 1.61% on below average volume. That is a concern. Where our technicals are still negative, but we're turning more positive now, and I have a number of charts to show you. As the market deals with this inflation and interest rate scenario, if they think things are getting better, the market goes up. If they think things are getting worse, the market goes down. Here's the intraday chart showing how we gapped higher and quickly went above R1. We jockeyed around the R1 level for a while before shooting up and going up to R2. We quickly went through that. We came all the way up to this 4,050 level. We're right underneath that before dropping back and then seeing a little bit of buying going into the close. What are some comments that we can make? The S&P regained its 50-period simple moving average as the 10-year note fell back below 4%. That's being triggered as the catalyst for what happened in Friday's session. Interest rates had been going up and up and up. Well, when they fell back, that gave some real support to stocks. On an intermediate term basis, we still have parts of our PMO study that are extreme negative. All of our short-term indicators have been worked off now, so there's nothing extreme negative. The dollar did decline and interest rates were down, and both of these together did also give some support to stocks. We still have all of our yield curves that remain inverted. Sentiment ticked back up. It had been at 49. Now, with the up day, it went back up to 55. Our trend, we did cross back over with the green line, so we're positive with the default as far as the ADX is concerned, but we're weakening because we're still below 20. I've changed our bias over to positive with 2 up days. We saw Thursday and Friday have nice advances, but I've kept our momentum at mixed. A large part of that has to do with a decrease in volume, because if some real volume comes into the sell side, that could push prices lower pretty quickly. So we're just keeping an eye on volume to see how it behaves going forward. The economic reports that came out, not real influential. The IHS Market Services PMI, it came in at 50.6. Last time it was at 50.5. It is barely above 50, so it's showing slight expansion of the economy. The big one on Friday was the ISM Services PMI. It came in at 55.1. This was greater than the 54.5% they had expected, but down a little bit from the 55.2% that we saw last time. The markets could have tanked on this. The idea that this was stronger than expected, this might cause the Fed to keep raising interest rates and keep them there for a longer period of time. The market could have easily grasped onto that and just went lower, but no, the market still wanted to stay above that 200-day moving average and then try to build off of that. Looking at some of our charts, the Ulcer Index is still above the moving average. So this is showing that fear had been increasing quite a bit, even though we rolled over a little bit with the Ulcer Index. When we look at the VIX, it really dropped. So we're well below 20 now, both on a closing basis, and the bar has also dropped below this 20 level. So it's just showing that things are very complacent right now with not a lot of fear coming into the market. Here's the VIX of the VIX showing how volatility has also been decreasing, both with the bar chart and with the line chart. The equity put-call ratio did decline from Thursday to Friday. That's not necessarily surprising. What we're keeping an eye on is the 5-period simple moving average. It continues to go up. And when we look at a longer-term chart, we're getting kind of close to this 0.8 level, which at times before, that often has marked a bottom in the S&P 500. It's the only kind of climaxing type of indicator that is even getting close right now. When we see big upthrusts in the market, it usually comes after a real big washout. Everybody's pessimistic on things. They're selling like crazy. Sentiment is extremely negative. And then that's the time when it's usually advantageous to come in and buy. We're not really working off of that condition right now. So that is a little bit of suspect as to the move going higher. Looking at how value and growth performed, growth outperformed slightly. It was up 1.63%, where value was up 1.61%. It also outperformed with the mid caps, but it underperformed with the small caps. On a good, solid upward move, we would want to see growth really outperform value, not be almost even. Another chart that may be providing some overhead resistance, we have the double exponential moving average and the triple exponential moving average based on 50 periods. We're coming right back up to this blue line. We'll have to see if that does provide some kind of resistance. And then not far above that, at the 4,083 level, we have this anchored moving average going back to the all-time high. If we continue to go up, that may provide some resistance. Another thing I wanted to bring up is the Keltner band, which lately I haven't really been showing this chart all that much. This tends to be positive because we were coming down into the second standard deviation below the midpoint. In Friday's session, we were able to get back above the midpoint and close above that level, so that is more positive. Another thing that could be positive but could also be providing some resistance is a 20-period moving average at the open, high, low, and close. After going down below all of these moving averages, we jetted back up, and we're coming back up into the moving average of the close. If we continue to go higher, sometimes these levels can provide some kind of resistance. Another thing that has switched more over positive is the force index, where we had been pretty negative. Well, we crossed above the zero line, so that's more positive now. And here's the ADX showing how we are declining with the ADX. It's curling over a little bit, but not enough to turn it up yet. So we're not in a trending environment. However, the green line did cross back above the red line, so buying power is on top and selling pressure is on bottom. So this is turning more positive. The daily chart, we were able to get back above this daily pivot and close at that level. And we're seeing that in a lot of our other indexes that I'll show you. On the bottom, we see where volume actually dropped off a little bit from Thursday's session. The stochastics, not extreme with the short term, not extreme any longer with the intermediate term. We're still negative with the long term, but it's starting to turn back up. The Arun, after having the red line pegged at the top, meaning sellers are in full control, it's starting to come down slightly. It's still negative overall, but we're starting to go sideways with our oscillator. The 20-period moving average, we were able to get back above the exponential moving average. It's the red line or the simple moving average that is the most important to the markets. That's what most people end up using. If we continue to go up, that may provide some overhead resistance, but if we can get it back above that and close above it, that would be more positive in the short term. Looking at the 50-period moving average, we're above both the simple and exponential moving average, so that's turning the more intermediate term back to looking more positive. And then our moving average tree just shows all of the moving averages together. This is another sign. With the parabolic SAR, we have a dot underneath. A few weeks ago, when we were still going up higher and we were kind of jockeying around, all of a sudden, seemingly out of nowhere, we had a dot on top. And that ended up marking the beginning of this downtrend that we've been in. That caught the markets by surprise. It's not necessarily a surprise to see a dot under this after we had Thursday as an up day and then Friday as an up day. Is this really turning to a more positive stance? On one hand, it's not really surprising that we're seeing this, but on the other hand, it's turning more positive, and so we have to go with that. Looking at the Chaikin oscillator, we're coming back above the dash line and going higher, so that's turning more positive in the intermediate term. Here's our PMO study, where the PMOs that are rising has been really improving. We're still extreme negative with the buy signals, but it is turning up, and we're flat with the PMOs that are above zero. Swell trading oscillator, this gave us a little bit of a heads up. This has been leading the way higher, at least to this point. Based on price and volume, we're starting to cross back above the zero line, so that's looking more positive. Bullish percent index didn't really participate all that much. We're still below 50, but it did go up. So this is showing some improvement, but it has not turned positive yet. The NYSE bullish percent index did tick up a little bit after really showing some recent weakness. So this is still negative overall. Shaken money flow bounced up just a little bit. We have green bars, but we're still in a declining trend with this indicator. If we drop below the zero line, that will turn things more negative. If we continue to go up, then these green bars will start to go higher. Balance of power shows that we're shifting more back to positive since we are above the dashed line. And the TTM squeeze is shifted back a little bit more positive. When these bars are dark and then they shift over to a lighter shade of red, that means things are looking a little bit more positive. The go, no-go system is still negative to neutral overall with a deep purple candle. The Heiken Ashi, for the first time in a while now, we're seeing an open candle. And the Kegi chart is also switched to a black line, and that is more positive. And the 3-line break also has an open bar. Short-term fib level, we just crushed this 4007 level. We blew right through that without any trouble. So right now, what had been resistance may provide some kind of support if prices end up coming back down. Here's a longer-term fib chart where we broke above that 4000 level, but currently we're more or less in no man's land. And then longer-term fib levels, we blew through that 4020 level. So if we decide to come back down, we'll see if that area provides any kind of support. The Elder Impulse system for the S&P has switched over to positive, and the McClellan oscillator based on the S&P 500 has shifted back to positive. Broader measure, looking at the NYSE McClellan oscillator, we're showing improvement, but we're still below the zero line. The summation index based on price is pretty much flat and trying to turn back up. Based on volume, we have already turned up, and sometimes this indicator does lead price. The top indicator is calculated one way, with volume being calculated a different way, so this gives us a more inside look as to what's actually happening. The Ichimoku cloud looks like it did provide some support, at least for now, where we're bouncing up off of the cloud. New highs, new lows, we did see a bit of an expansion with new highs. However, our 5-period continues to decline, as does our 10-period moving average. It's flat to turning up slightly. The advanced decline line showing some improvement based on price and volume, and both are still above the moving average. We were able to cross back above the zero line with the advanced decline ratio. And accumulation distribution also turning back more positive. We're above this advancing moving average. But with volume, it continues to drop off overall. The Dow was able to get back above its pivot level. We're still underneath the 50-period moving average, but the 200-day moving average did hold up. The diamonds, based on the Elder Impulse system, has switched back to positive. The NASDAQ is right up to the pivot point now. Will that provide resistance, or will we be able to break through that? We did regain the 50-period moving average, but we have not seen a recent golden cross, at least yet. NASDAQ 100 right above the pivot and also above both moving averages. The Qs have also switched back to positive. Looking at the small caps, also right at the pivot. The small caps have changed over to positive. The mid caps were able to break through the daily pivot and close above that level. And with the Elder Impulse, they are also positive. The Russell, after really battling along this support line, was able to get back above that and close above that level. We're seeing some improvement with the RSI crossing back above 50. Although the MACD is still negative, it is starting to turn up. Looking at the home builders, this is an area we want to keep an eye on. We're starting to see a little bit of a divergence here, where we saw a real upward thrust with the S&P, and home builders did okay, but they didn't do as good as the S&P. So our ratio is actually declining a little bit. They had been having a real strong tendency to go in the same direction, and we're starting to see this relationship weaken a bit. So we'll just keep an eye on this chart. As we have been going up with prices, fear has been going down. And looking at the bond yields where we were above 4%, we dropped back down below 4%, and that gave a lot of support to stocks. Here are the price of bonds. After really going down, they have reversed slightly. Up on top, we have an RSI that is improving but still below 50, and we still have a declining MACD on the bottom, although it's trying to turn up. Some updates with our possible positive scenarios. The 19-day exponential moving average of the advanced decline ratio, we were able to get back above zero based on price and volume. So that's turning things more positive. The S&P utilities ratio starting to go up, and a lot of times when this outperforms, that gives really good support to the S&P. When this spikes and starts to come down, a lot of times that will mark a top in the S&P. 2-year yield keeps going up overall, so we're just waiting to see when this spike finishes going higher and then starts to come back down. And our staples to S&P 500 ratio is now declining again, so this is looking like a viable spike. But we want to see follow-through price action. We can't just shift everything over based on what happened on Thursday and Friday. We need to see some upward thrust movement with the growth stocks really taking a leadership role. So what's our outlook for Monday? The technicals are still negative, but they could be turning positive. And I say could be. We're coming into a week that may face a lot of challenges for prices going higher. So we'll just have to see if there's some legs behind this more positive stance. On Monday, we do have factory orders coming out, and then the whole list of geopolitical events with the markets really being fixated on inflation and interest rates. We do have some speeches in the upcoming week on Tuesday and Wednesday. That's when Chairperson Powell will testify before Congress. And then on Thursday, Vice Chair Barr will be speaking about crypto. Looking at our Stock Traders Almanac statistics just for Monday, we are neutral to somewhat positive or somewhat negative. The Dow is at 47.6, so that's neutral to negative. The S&P is 52.4, since it's over 50%, that's neutral to positive, where the NASDAQ is a little bit weaker, being neutral to negative. And then the other areas that I discuss periodically throughout the videos. Here is the trading day number 4, where we do have a tendency to have some weakness overall. This green line is the S&P 500 in a pre-election year, which is what we're in right now. So even though historically we've seen some weakness, in an election year we have seen some strength from day 3 to day 4, and it tops out at about day 5 before we see some weakness coming in. Also, we're getting into that pre-election after midterm bear sweet spot now. This is the green line with how things have performed when they have had the same scenario that we have right now. And we're also into that sweet spot coming into the pre-election season where the S&P has performed very well during that time. So our scenarios, can't really go with the down one now, even though our technicals are negative, but to have a big upthrust like we saw, even on below average volume, we have to pay attention to that. Can't really go with the up one because we're not trending right now, even though our ADX is weakening and it's below 20, but it has switched back over to positive. So our conclusion, the S&P is negative, but it could be turning positive. We want to see more follow through with this. Short term, it's negative, and it is more positive in the short term. Intermediate term is also looking more positive, and we remain positive in the long term because we're still above the 200-day simple moving average. Thank you. I hope you found this helpful. I will be posting the weekly video, the intermarket analysis video, the deep dive video where I go through all the charts that I didn't cover in this week's videos, and then I'll also be posting the supplemental video where I go through the current market valuation and the Isabel Net charts. Have a great weekend, and I will talk to you in the next video.